Hi, this is Joseph. It is December 28th. It is Monday, 2020. We're going to take a look at the trade of the day. This is the one that I've been watching. I did a weekend analysis. I do a weekend analysis approximately every weekend that I can, unless the market's closed for holidays. And I send that out to all of my coaching students, and it's basically my review of what I could expect when the market's open, possibly looking forward. Sometimes you get the opportunity to see, and to figure out good trades that could develop throughout the week. And then other times maybe you're in the middle of an uptrend and you've got to wait until it settles and hits the highs and reaches a specific level and then creates that consolidation phase, which is exactly what we were reviewing over the weekend. So before I go any further, again, please keep in mind that this is just for educational purposes only. These are just my trade ideas. These are the things that I'm looking at. This is how I apply these methodologies and these strategies using point and figure, bar charts, reading volume, counting the waves, and I'll show you exactly how I pulled all of this data together. So my analysis over the weekend, as I mentioned to my coaching students, was that my expectation is there could be an opportunity to sell the pound dollar, and it could be a pretty decent move. Now, I'm going to go over here to the left chart. This is a bar chart, and you can see this is the daily time frame on the pound dollar. Now, I'm not going to get into the specifics because I've got other videos on the YouTube channel. If you want to take a look at that, you can see how I'm creating these ranges of consolidation, why and how I identify certain key levels of resistance and support, and leaving these resistance and support levels initially with this stopping price action here from December 4th. This is what I was talking about over the weekend. So we had a high here on December 4th, and then we had this automatic reaction down here, which landed on December 7th, created this low, and from that point, I've got a resistance, I've got a support level. Now, one of the things that I used to do was move my resistance and support levels. When I first started trading, I would move it around, and I wasn't paying attention to this type of setup. What I'm actually doing here is looking to identify whether or not or confirm if I'm looking at an area of distribution or is it an area of reaccumulation, and should I and could I expect price to turn around and go back up and create another extension, another leg higher in an uptrend. Because as you can see here, we've been in an uptrend for a little while. This actually went all through July and went sideways a little bit through the summer months. I think it was August, and then it kind of broke out to the upside, and here we are still moving a bit higher. So at this point, again, looking at the daily time frame, before I consider trying to short, and this is actually what it looked like over the weekend, right? So let's go ahead and hide the Monday the 28th bar, and you can see this is what it looked like when I was analyzing it and I made my video over the weekend. So we were looking at this high right here from December 4th, this low right here from December 7th. And the reason that I leave my resistance and support levels, I mean, I'm well aware that I see the overall high here from December 17th, and I can see the overall low down here from December 11th. But the reason that I leave my support and resistance levels on these two key dates right here, the 4th and the 7th, is that, again, I want to see how price acts as it's approaching either support or resistance. So let's go ahead and take a look at, let's say, this move down here to the downside. On this date right here, this was on the 11th, I can see that price was trying to take out that low, that initial low, that stopping or automatic reaction to the downside. You can see how it kind of bounced and went right back up in the middle of that range and then came back down. At this point, when I see a candle like that, and this works effectively regardless of what time frame I'm looking at, whether it's a 5-minute, 15, 30, 1-hour chart, it's the same thing. It's the same basic principles. And I'm looking for this to identify this range of consolidation, which could be considered distribution. And if it is in fact distribution, I want to know. I want to be able to identify the characteristics and spot the different phases that price is moving as the market, as smart money is actually testing to before it makes its next breakout, whether it's to the downside or to the upside. So again, I'm watching how price closes in relation to that low. If I would have just simply moved my support level down here to the low on that date, I probably would not have really been able to identify where that bar right here, this bar on, let me go ahead and highlight that, on the 11th, where it closed. You can see where it closed really wasn't too far away from the actual low here from the 7th. So a few days later, right, it comes back down and it moves back down. And at one point during the day, it looked like a really strong bearish candle. There probably was a lot of volume there. Sometimes volume and the divergence can help me spot turning points. Perhaps a spring, some kind of low. The same thing with moves to the upside. I'll show you in just a moment the upthrust that actually didn't go too far. So again, we're looking at the amount of momentum, the amount of participation, the amount of effort that's moving and going on this particular bar, again, regardless of which time frame it is. And then identifying the characteristics here on the close of this candle or this bar. The price is not closing very far from that actual support low. So there's a lot of effort, there's a lot of momentum, there's a lot of activity, but it's still not at the end of the day doing anything. It's moving right back up. So you can then look at some of the volume. If there's quite a bit of volume on a candle or a bar like this, you could say it's possible that maybe a lot of the volume was actually buying volume. That is a possibility in certain situations, and you can identify that. That again helps you determine some of these turning points. It's a clue, it's a signature, it's a footprint in a sense that will help us determine if we can actually start looking for opportunities to trade to back up to the upside. So obviously at some point we're going to see some kind of retest. It doesn't have to happen in every situation, but if this is to unfold as I expect it to, I would continue to expect more retests of support and resistance. So let's go ahead and move to the next level up here. And this was that first resistance level here as it broke through. This was on the 17th. And again, notice that's not as strong a bar as the one down here that we were looking at on the 11th. But the one here on the 17th, again, notice the close. It's approximately in the middle of this bar of that trading day. Again, this is a weekly time frame, and it's really not going very far from the actual resistance. So again, trading it back and forth, we've got this phase B sort of price action. It's choppy. I tend to stay away from it unless I can clearly see a support low, perhaps maybe trading off of a 4-hour chart. If you look at my YouTube channel, you can see, I think it was about 3 or 4 weeks ago, I traded off of a 4-hour setup. It gave me a precise entry on the point and figure. I'll show you my point and figure in just a moment. But it was a bounce on the 4-hour time frame right off of a critical key support low, and it was perfect. And then, of course, volume confirmed that divergence, and I was able to trade it right back up for a pretty strong move. So again, as I'm analyzing all of this over the weekend, I'm thinking to myself, well, we've got another double top up here. And this is where I pulled in more data. I had to go to a different time frame, and here we're actually looking at the weekly chart. So this is the weekly chart, this is the pound, and you can see now I've got volume here, volume average here in the middle. I've got a moving average, a wave average indicator down here at the very bottom, weekly time frame. And again, you'll notice that for the last, this red candle here is actually the start of this week. It's this week, it's an open live candle or bar. But the previous 2 weeks, we were running right into this resistance from this time last year. Right here, this time last year, you can see it. It's December 19th. That's the week of December. The week of December 9th, 2019, and we're running into this level again. So last week and the week before, we kept running right into that level, but none of these bars were closing. None of these, we never saw a real close above that resistance level, and then that also was sort of a the divergence that I'm looking for. It was a clue. I'm trying to pull all of this information together to try to find an opportunity to either trade it back up to the upside. Should I expect some kind of a breakout, or could I expect a reversal? So again, all of this information pulled it together so that I could see the clear reversal opportunity prior to it actually happening. So this was my analysis over the weekend, that I did expect a move to the downside. I wasn't too sure how strong because I still didn't get a signal to get into the trade. So this is what I used to get into the trade. At this point, once I've been able to identify the bigger picture, the overall structure here, you can see we're in a range of consolidation. Clearly, this is what I'm using to get into the trade. So now I'm going to switch to my point and figure chart, and this is what actually gets me into the trade. Now this is not set up, this point and figure chart is not set up for the bigger picture, like looking at it from a daily or a weekly or monthly perspective. This is more for day trading purposes. This is going to be a pretty fast moving chart. So here is my actual entry. As you can see here, when this column and price starts to take out that low, this low was set in place here last week. So last week we had this move here to the downside. This was actually on the 24th, and then it bounces around, and then it kind of closes at the end of the week about in the middle of this range, and then it opens up on trading on Sunday. I'm in California, so markets open on Sunday, but it could be Monday depending on where you live. Monday the 28th. Moves around, makes another retest up here at resistance, and then starts to pick up momentum. And right here is where it gave me the opportunity, which was about 2:16 or between 2 o'clock in the morning. This is California time, Pacific time. I'm 3 hours behind New York, so this would have been the 5 o'clock candle, 5 a.m. New York time. And here's my entry. Just let me go ahead and move this out of the way, and I'll show you what I'm using for price targets. So as price takes out the low right here, getting in at approximately 35.17, 35.18, I'm trading it to psychological levels in a situation like this. And the reason that I do that initially is when I'm looking at a big level like that resistance, remember the bar chart that I showed you on the daily time frame, we were looking at resistance. If it's going to continue to move back down to the 1.3200 level on the daily time frame, which is another 200 and something points from where it is now, it's going to give me another opportunity. There's going to be another trading day throughout the week or at some point where I can get a second entry opportunity similar to what you see here, just on a smaller time frame. This is a smaller time frame. So again, I'm going to take pieces of this until I know I'm right and I have more information and I have more data. Nothing wrong with that. Getting in at approximately 17, 1.3517, trading it to the first psychological level, which would be the double zero. Here's 1.3500. That's the double zero. The next psychological level I trade it to is the 80. So I trade it. These are the psychological levels that I trade it to or would trade to. It's the double zero, the 80, the 50, and then the 20. And then I repeat the same thing. It's the same thing going back up. If I was to trade a breakout to the upside and I was going to lock in profits, and again, I wanted to take the a small piece of the move until I'm sure and certain that we're actually seeing a new intraday trade or trending opportunity, I want to be very careful. I don't want to hold on to a trade indefinitely. And this is one of the things that point and figure helps me do, is it helps me identify the count. The count is how far is price likely to go. We refer to it also as fuel in the tank. How far is it going to go? How long should you hold on to the trade? Where could you expect to take profits? Very often you get into a really good trade and you hold on to the trade too long, you give back all the profits, and then you end up getting stopped out. That's a really frustrating situation to be in. Point and figure will practically remove all of those frustrating situations that you find yourself in when you don't know how long to hold on to the trade. You don't know where to lock in profits. Point and figure is going to help you solve that problem. If the point and figure is still relatively too new or the trend is relatively too new, I'm going to trade it to psychological levels. Very often, the point and figure will actually give me a count that lines up with the psychological levels. So getting in at 17, I traded it to 80 initially. That's a good trade. That's just under 40 pips. It's about 35 pips, including the spread. And then it reverses, goes back up, retests, and then it gives me another second entry opportunity. There's actually two of them. And then it breaks down this support low here at 77, 76. Again, trading it to the first psychological level would be 50, which would be right here. And then the second target would be the 20. So far, it hasn't hit 20. I could perhaps watch to see if it makes another move down to the 20. And then at that point, I could close the second half of the position at 20.